Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi along with my co-hosts, Emily Parker, CoinDesk's Executive Director of Global Content, and the Thai Director of Content, Lawrence Lewitton. Good morning, guys.
Morning.
All right. Before we get into our show today, let's take a look at what's happening in the markets, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is at 30,608, briefly creeping up above 31K, back down at the time being. Let's see if Ether is following the same trend. The CoinDesk Ether price ETX index is at 1,902, following directionally the same trend as Bitcoin and DeFi assets. The DFX CoinDesk's DeFi index is at 118. All right, let's get to our first guest. We're going off to Hong Kong. The jurisdiction is pushing to become a major Web3 hub, with the government recently establishing a task force for promoting Web3 development. Joining us now is Animoca Brands co-founder and executive chairman, Yat Siu. Good morning, Yat.
Hello, how are you? Nice to be here. It's actually more like good evening here, but anyway, it's nice to be here.
It is our morning. It's your evening. We're just a global show. It's wonderful to have you. Now, you're among 15 people in that task force. Animoca Brands is headquartered in Hong Kong. Talk to us about what your role is going to be.
Well, I mean, it is what it says, right? The role is basically to help promote Web3 development in Hong Kong. And the role entails not just local development, but also to bring in overseas talent. I mean, there's already, thousands of individuals and companies that are now looking to apply for licenses or setting up shop in Hong Kong in areas of Web3 development. And I think the other thing that's fascinating is that this isn't just a government initiative. It's also trying to bring in private enterprise and bringing in basically companies like ours that know something about the space and driving the space. I think it also demonstrates Hong Kong's really goal to be the Web3 leader, not just actually in the region, but, in some ways, given some of the, I guess, less friendly actions happening in other parts of the world, I think there's an opportunity for Hong Kong, and that's what they see as well, to become a global leader, really, in the development of Web3, crypto, blockchain, and digital assets. And that's really part of our job, to basically help make Hong Kong stay relevant and to continue develop basically, progressive frameworks as Hong Kong has done so far.
Given your experience, is there going to be a focus on bringing business from the gaming sector, the DAO sector over to Hong Kong?
I mean, that's certainly one area that we're going to support, but it's basically everything. Web3 covers DeFi, covers, everything related to crypto, covers exchanges, and of course covers non-fungible tokens, gaming, also education, as we're doing most recently, and other forms of, basically culture as well. So it's the whole gamut.
So if you can, this particular task force, what do you think the long-term effects will have on mainland China? Do you think that this serves as a model or a potential a laboratory, if you will, for the mainland to change its policies? As you talked about regulatory crackdowns, if you will, on crypto in many countries, including the United States. But will this ultimately change the mainland's mind with how it deals with crypto?
Well, I mean, we just have to look at the lens of what happened just a few weeks ago. In early June, Hong Kong announced basically that it allowed for retail trading for 16 cryptos that are out there. And just around the same week, Beijing came out and put out a Web3 strategy paper and specifically said that, Web3 is the future of the next sort of iteration of the internet, and China has to lead in that area. So that's one. And then, of course, on national TV, as in CCTV, they were broadcasting about the development in Hong Kong and the fact that you can buy Bitcoin there. And this went across basically every Chinese sort of citizen in the national broadcaster. So, you could say that maybe it's just a very interesting coincidence, or the other perspective is to say maybe this was not so much of a coincidence after all. Hong Kong has always been a sandbox for China when when it comes particularly to financial services. And when you think of Hong Kong's role in the past, it's always been the gateway for the development of the financial services in and out of China, right? The FDI that goes from foreign investment into China often routes through Hong Kong and vice versa. It's, you don't have a sort of free exchange of, for instance, foreign currencies in China, but you do have it in Hong Kong, which is basically, a renminbi clearinghouse, as an example. And so we expect the same thing to happen in digital assets and crypto as well. And of course, the other thing is that, for China, there is a wider theme around that, which is, given everything that's happening in the US, there's sort of two themes. And this, by the way, isn't just for China. It includes places like Japan, Middle East, and even Europe in the same lens. One of them, of course, is dependency on the dollar. So really strengthening, crypto, one perspective is to say that it's sort of a broader attempt or a broader move for, sort of a form of de-dollarization. That's obviously one, agenda that sort of serves, various interests. And the second one is also to sort of really think about it, reduce the influence of predominantly American technologies, right? If you think about what's happened in the Web2 space, the whole world, for the most part, with the exception of countries, including China, is dependent on US-based technologies, whether it's Facebook, Amazon, Microsoft, Google, Apple, you name it. And that actually is something that is risky from an American, from a national sovereign perspective as well. So all of these sort of agenda items come together to try to, and there's a very strong reason why you want to develop and promote Web3, not just for Hong Kong and China, but also in Japan and in Korea and in the Middle East and Southeast Asia and many other countries.
Yeah, it's so great to see you. So I want to just dig in more to this Hong Kong question. So Hong Kong actually, in some ways, seems very similar to Japan in the sense that both are sending very welcoming messages to the crypto industry, in stark contrast to some countries that shall remain unmentioned, like the United States. But when you kind of scratch beneath the surface, and I don't say this is not a bad thing at all. This is not meant as a negative judgment, but both of those jurisdictions, Hong Kong and Japan, are not easy. In fact, I think they're going to be very, very difficult. And so I just want to talk to you a little bit about that, because I think with Hong Kong specifically, there's been a lot of fanfare about licensed exchanges, but there's very few exchanges licensed in Hong Kong. It's only a handful. I know it's quite early, but even, for example, opening up to retail traders, it sort of depends on how you frame it, because before there was already retail trade in Hong Kong, via OTC. Now it's more like they're saying, if you're not licensed to do retail, you can't do it, right? So it sort of depends on how you look at it. So I guess my question for you is practically speaking, how difficult is it to actually operate in Hong Kong? Because it strikes me as it will be a relatively challenging environment for exchanges, just because there's a lot of rules. And again, it's not a bad thing, but it seems like it might be more challenging than some people would expect, given how welcoming the rhetoric is.
Well, I mean, I guess, first of all, regulation is broadly a good thing in the sense that once you actually put a regulatory framework, you give confidence to the consumer as well, right? I think one of the things that, one could make an assumption as to what's happening in some of these unnamed places, as you say, is the lack of regulation actually removes or sort of creates a kind of concern and doubt, and also basically doesn't give it any legitimacy. Because the moment you start to regulate it, you give it legitimacy, regardless of how strict the rules are, because you're basically acknowledging that this is an asset, that this is something that is going to be here to stay, and you have to find a form of regulation. Now, I actually think the exchange, sort of the rules for the exchange, I mean, hash key, then there's of course there's a bunch of other basically exchanges that have already received it. And again, you have to remember, this stuff really sort of kicked off in really early November, effectively. And in that time, not only are there crypto ETFs, the HKMA already issued a tokenized green bond. The monetary authority actually sent out a notice to banks, as you may have recalled, that said, hey, you got to start doing business with crypto companies, and you got to sort of be smart about it, as opposed to just simply saying no. I mean, I think it's probably the only regulator that has sent a message across multiple banks. HSBC, which is one of the world's largest banks, basically now started to allow the purchase of these crypto ETFs to their clients as well. So there's a lot of development that's happening throughout, and it's actually a very welcoming climate. And the main thing is that it's not just about the exchanges. That's only one component. And these are probably the ones that do require the most regulation, just because of everything that's happened. I don't think that's a bad thing. But it also invites all the other industries around it, because what's happening in other places where regulation isn't clear, it affects businesses who are making NFTs, for instance, who are doing blockchain gaming, who are doing sort of crypto art, for instance. I mean, these are not, by any stretch, should be considered as something risky risky or problematic. But in those places where there's no clear regulation, people are fearful. Whereas in Hong Kong, at least, you can say, oh, well, okay, fine. So they've made it very clear NFTs aren't going to be regulated, for instance, in the classic sense, and they're welcome to do business, and they can just open up. And by the way, they can open up a bank account as well, which is another big thing, because in many crypto companies struggle to open bank accounts, frankly, anywhere in the world, just because of all the concerns that have been put out by some other places in the world that shall not be named.
Well, thank you. I think that was actually a very detailed summary, because I think sometimes it's hard to get a sense of what exactly is happening in Hong Kong. Quickly, I want to just turn to a totally different topic, which is gaming, GameFi, Web3 gaming. I was at the event in Kyoto, IVS, a bunch of Animoca people were there. It seems like everybody in Asia is talking about gaming, right? And game. It seems like that's really a big topic. And I'm just curious, given that you're sort of in the center of that world, where do you see some of the hotspots for gaming in Asia? I'm hearing a lot of talk about Japan, hearing a lot of talk about Korea, obviously Southeast Asia. I'm just curious, what you're seeing. What are some of the interesting trends you're seeing in sort of the GameFi world?
I mean, those are some of the main trends that you mentioned. I mean, outside of crypto native companies like ourselves, you also have basically the big publishers and the game developers in Japan and Korea. I mean, you've got Krafton, the creators behind PUBG. You've got Sega. You've got Square Enix, the creators behind, Final Fantasy and so on. These are major mainstream companies, all embracing Web3, thinking about digital property rights and non-fungible tokens. Many of them that we're working with as well, right? And in stark contrast to what's happening in places like the US, for instance, where game developers are, maybe secretly wanting to do it but can't, just because there's a revolt either internally in the company or even within their customers. So it's quite a big contrast. Southeast Asia obviously is a big one as well, and then of course places like the Middle East. I mean, places like UAE and Saudi, for instance, are also very much embracing this trend. So I would say that what you should be expecting, and certainly that's our sort of forecast, is in the next 12 to 18 months, many of those games that have been in development for the last 2 years are going to be released. And a good game does take many years to produce. And these games are going to have all the high fidelity and the kind of graphics that, I guess the more sophisticated gamers are expecting. And so we think, in the next 12 to 18 months, we're going to see those games come out and sort of have a real impact, where people from, let's call it the Web2 gaming world, are just going to play these Web3 games because it's fun and entertaining, and then basically get sort of onboarded and introduced to everything that relates to sort of, I guess, GameFi and the lot.
Yeah, thank you very much for joining us this morning for us. Thanks for staying up for us. That was Animoca Brands Executive Chairman Yat Siu. Now, we are going to stay in Asia. In an interview with CoinDesk Japan, Circle co-founder and CEO Jeremy Allaire said the company is considering issuing a stablecoin in Japan under new rules. Emily, you've been following the story closely. Talk to us about the new legislation that came into effect on June 1st.
Sure. So CoinDesk Japan, our colleagues at CoinDesk Japan, interviewed Jeremy Allaire about Circle and some of their thoughts about the Japanese market. And basically, what Jeremy Allaire told them is that Circle is considering issuing a stablecoin in Japan. Now, on the surface, this might not seem like such a bold statement. Okay, he's considering it, he's looking at it, but it's actually very significant, because until recently that would have been impossible, and now it is possible, because Japan, and I think a lot of people don't know this, stablecoins were essentially not allowed in Japan until very, very recently, and that's recently changed. Now, it's not going to be easy to do this. There's quite a process to go through, but Circle is one of the players that I think sees the market opportunity in Japan. Whether or not they're going to issue a stablecoin in Japan remains an open question, and there's a lot of hoops that they would have to jump through in order to do it. But I think the fact that we have such a major player now exploring the Japanese market really sort of signals the beginning of a new era in Japan, which is like the beginning of the stablecoin era, which has not been the case up until now.
Yeah. So how essentially do we know anything about how it would work? Or I assume this is a stable coin that's based on the yen, correct? I mean, they must think that there's some demand, or there will be a demand for it.
Well, I think, Jeremy Allaire obviously was, careful, and we don't know exactly what Circle's plans are, again, or if they're even going to do this. But I think now there is the possibility for both yen-based stablecoins and dollar-based stablecoins. Now, I think from the Japanese perspective, what I'm hearing is that there is some interest in having a yen-based stablecoin, because that's just something that could potentially just increase the usage of JPY. So I think just from a policy perspective, I think there's definitely interest in that, and just sort of, creating sort of like easier transactions, in sort of the blockchain crypto world, via JPY stablecoin. So I think that is part of the goals for Japan here in doing this. I mean, it's really notable here that at a time when, the US, for example, I mean, there's been so many stablecoin bills, right? We're always talking about them on the show, and we have yet to see one become a reality. And, it's interesting that Japan would sort of choose now to kind of open up to stablecoins. In fact, they're one of the first countries to do so, clearly because they see some sort of opportunity here, rather than risk. However, it's worth saying that this is going to be a very, very strict sort of regime. Like, for example, say you have a stable coin, Japan is requiring that like the money that backs that stable coin is basically kept in Japan, right? So they want, total one-to-one redemption. So I think it's fair to say that there are some stable coins, which will remain nameless, major stable coins out there that probably will not make it into the Japanese market, because I don't think they would agree to such terms. And, there's only certain type. Yeah, I mean, you can name
one
them.
That rhymes with feather.
but but there are other rules in terms of like only certain types of institutions can issue stable coins. So again, not going to be easy. This is generally the case with Japanese crypto regulation, is that like they're very forward thinking, they're very welcoming, but they're very tough. So I think that's really the question, is like how this is going to play out and what kind of players will make it into the Japanese market. But I do think Circle's statement is definitely significant.
Zooming out, Emily, this sounds very similar to what we were just talking about with Yat in regards to Hong Kong being very welcoming to Web3, but also having quite strict regulation. Can you tell us about the broader Web3 perspective in Japan outside of stablecoins? What's happening there?
Yeah, I think Hong Kong and Tokyo are quite similar in a lot of ways, because both of them, and again, it's so different from the US. I mean, when you come to Tokyo and you see, so I was, at a crypto conference in Kyoto, there were I don't know, the organizer said there was something like 9,000 people there, mostly from Asia. I mean, just really like a lot of energy and optimism, a very different vibe from the US. And, you have the Japanese government, you had the Japanese prime minister actually give an opening address at this crypto conference. He didn't really talk about crypto, but still, can you imagine President Biden giving an opening address at a crypto conference? I find it slightly hard to imagine, right? So just on the symbolic level, Japan is kind of all in, right? I mean, they're just really, promoting Web3 and welcoming Web3. I guess the other side of it is that it is strict. And I think, for example, the stablecoin rules are strict. There are other areas where it's very strict. I think it's difficult to operate an exchange in Japan. Coinbase didn't make it. Kraken didn't make it. They both left the Japanese market. There are various reasons for that. But I think, it's generally known that this is difficult. I think there are also some tax obstacles that remain. Japan recently did relax this one very onerous tax restriction on unrealized gains, but you do still hear a lot of complaints about high taxes for crypto. So it's not exactly the easiest place to do crypto, but like Hong Kong, it's clear and it's welcoming. And I think we will see more crypto businesses kind of looking to Japan and Hong Kong in the future.
How will this affect CBDCs in Japan?
It's a really interesting question. I mean, there's definitely talk of a digital yen, but it's not the same kind of like animated is a very euphemistic term, debate that we see in the United States, right? Like you don't hear, presidential candidates saying that, this is going to be a surveillance mechanism. I mean, you're not really.
They don't have Florida in Japan. That's the problem.
Yeah, exactly. There's not a Japanese version of, DeSantis
Florida
saying that this is a surveillance instrument. So I don't get the sense right now that there's the same kind of divide between, CBDCs versus stablecoins, and the two of them, can't exist. I mean, I think if the Japanese government thought that, then they, I don't think the road for stablecoins would be as open as it is now. But I think that remains to be seen. I mean, I think it's unclear exactly what is going to happen with the digital yen, but I don't get the sense that they are in this sort of like stark competition in the way that many frame it in the United States.
Emily, thank you for that. It's always a pleasure zooming out and getting the global perspective on this industry with you. We are going to take a break, and when we come back, we'll be taking a look at the markets as Bitcoin briefly tops $31,000. We'll see you after these short minutes.
Well, just very briefly today, we had Bitcoin trading at $31,000. I mean, who would have thunk it a year ago? Maybe a little bit less than a year ago. Who would have thunk it back in January? And that is because we've had some incredible gains this past month, and really this entire year. So joining us now to discuss the crypto markets is CoinDesk Indices Head of Research, Todd Groth. Welcome, Todd.
Good to be here. Welcome.
Glad to see you. So, Bitcoin up 20% in the past 30 days. But what's happened in the past quarter, meaning, April, May, June?
So, looking back here, first off, we started the quarter strong with Consensus, the conference in Austin, and then from there we've been in a bit of a range. And we've tested the high end of the range, the low end of the range. May in some sense was fairly muted, coming back from a good April, and that was all. This is all also been on the back of SVB in March. So with May, what we had was that there was sort of treading water in the markets, range bound again. And part of that was crypto being exposed to macro headwinds of the repricing of interest rate cuts or pricing in no cuts for the end of this year. In March, we had 3 cuts priced in. Then it took a range bound May to basically take those cuts out of expectations, so that there was no dovish view towards the end of the year. And over that time, we had a lot more on-chain activity with meme tokens, Pepe specifically. Just in a few days, going up to 1.5 billion market cap. Now it's around around half that. So that was sort of April, May. And then June, we've had a sort of two primary events that have resulted in. First off, we had the Binance and Coinbase SEC announcements. That really put a damper on all the medium to small cap alternative tokens. They're still down relative to Ethereum or Bitcoin. So you have that combined with then BlackRock filing for the Bitcoin spot ETF, which was obviously very Bitcoin positive. That's resulted in a pretty big bifurcation in this market. I know we sort of had that before with the futures, CFTC considering both Bitcoin and Ethereum to be commodities. Everything else is security. That continues to play out, and so with that, we're seeing Bitcoin dominance back above 50%.
Let's dig in a little bit on the issue of the sectors, right? So DAX, the digital asset classification standards that CoinDesk has put together, it divides the market into several sectors. What about those sectors? And you talk about this bifurcation. Mm-hmm. What does that mean going forward, or what did we learn in the recent past that could tell us of why and where we are today?
So we're seeing that bifurcation sort of play out even within the sectors, because both currency and smart contract platform they contain Bitcoin and Ether tokens within them respectively, and those have been relative outperformers, especially compared to digitization, culture and entertainment, computing sector. Those had some of the names listed in the SEC enforcement action of Coinbase offering unregistered securities. So that's really sort of split the market into those different themes of those that are regulated, i.e. Bitcoin and Ether under commodities law, versus everything else effectively. So we have continued to see that, and I guess in summary, Q2 of this year was very, very much more of a relative value market, as opposed to Q1, where Q1 we had a big reversal, sort of a January effect plus in the broad market, which had a significant bounce versus 2022.
Tell us a bit more about what the Bitcoin and Ether trend indicators are showing us for the rest of this year.
So currently they're both registering strong positive trends upward. So So that's been a good indication. And actually, when you look back at the trend indicator readings in April and May, mentioned sort of range-bound markets, that was reflected in the indicator. What's nice about the indicator is it's a way to kind of filter out the day-to-day noise. As we're trading through this range, we're currently on the higher end of the range, but the range generally does have a positive slope to the upside. And that's been shown in both trend indicators. For June, we primarily had Bitcoin as a positive trend, whereas as Ether was initially a neutral indication to a slightly positive. Now that's full positive. So both of them currently are pointing to strong positive trends in the market. So we have the Bitcoin trend indicators. Also thinking about more macro indicators. We have sort of two offsetting effects currently. So we're starting to see rates rise again, both real yields and nominal yields. This morning, actually, the 2-year U.S. 2-year was about 5%, the 10-year about 4%, which are on the upper end of the range. That's been a bit risk negative in the market, and we've actually seen that this morning with Bitcoin selling off a bit from last night's rise higher. But that's offset with credit spreads that are still tightening, which is risk positive. So those sort of offset each other. The bigger elephant in the room is the inverted yield curve. We've been inverted since last July. That's generally a 6 to 18 month out indicator. It's the most inverted since the early 80s, and it continues to invert. So that is
going to happen any day now.
Exactly, any day. We've got a clock over our heads in this market. So it's a matter of when it strikes. When does the yield curve strike? It's been a leading indicator for all but one recession since the 1950s, I believe. So TBD on that. It'll be interesting to see where we go with that, and part of that will have to be the monetary response going into that recession, as to where crypto goes from there.
Todd, thank you very much for joining us this morning.
Thanks for having me.
That was CoinDesk Indices Head of Research, Todd Groth. Coming up, Latin American crypto services provider Ripio has been approved to operate in Spain. We speak to the CEO after this short break. Good morning and welcome back to First Mover. Latin American crypto services provider Ripio gets the green light to operate in Spain as an exchange. It's the latest in a number of licenses to crypto companies granted by the country's central bank. Joining us now to discuss is Ripio founder and CEO Sebastian Serrano. Welcome, Sebastian.
Well, thank you. Thank you for having me. And good morning.
Good morning. Tell us about your plans for Spain. What do you plan to do with this approval?
It's been a lot of work. As a company, we started 10 years ago from Argentina, and then over the years we grew to Brazil, to almost every other major country across Latin America. And this year we first got a license in Florida, which is outside of Latin America, and now after almost 2 years of working, we got this approval for our license in Spain, and we decided to open the operations in the country because it has a lot of connections and flows with Latin America, and it's still a Latin country, but not in the continent, and it's the first time that we cross outside of it. And we think that we're gonna have a lot of opportunities for people that buy and sell stables and crypto and need to send money into Latin American countries. We also always had interest from Spain. We create a lot of content in Spanish, and that brings us always traffic to us from Spain. And we also, over the recent years, we have been doing a lot more focus on B2B and corporate deals. So we also are planning to offer our B2B services and custody for European companies.
Now, Ripio was founded in Argentina and also operates in Brazil, Mexico, and the U.S. Talk to us about the regulatory challenges you're facing right now. Those are a lot of different jurisdictions with a lot of different regulation. How are you managing? Where is it easy? Where is it challenging? Break it down for us.
So every country has its challenges and its views and its own context. For example, in Argentina, there is a lot of concerns about the exchange rate in the country for dollars, and there's a lot that we work with the regulator about the impact that has crypto in the exchange market, and there's a lot of that we discuss. We recently did a conference in Argentina, our first conference, and we got the president of the CNB, which is kind of like the SEC for Argentina, and the people from the Central Bank of Uruguay, and other regulators. And this is part of a lot of work that we do in every country that we have a presence. Many of the countries in Latin America are starting to have regulations, and we participate a lot in that discussions. For example, early last year, Paraguay has now a law for crypto, and because of how the context of the country is, it has a lot of focus on mining, because it's a country that has a lot of mining in Bitcoin, and that's what you see in every country. Every country has different concerns about or its remittances, or so in every country we're seeing different concerns that we need to work on. But the thing that I think is common is there is coming regulation in almost every country. There is a law coming up in Uruguay that is in Congress. There is a new law that passed in Brazil that the central bank needs to regulate now, and you see that almost every country now is getting some sort of regulation. Each one of them has its own particularities and concerns, But I think like in the next 2 years, we're gonna see like almost laws in every Latin American country regulating crypto.
Sebastian, let's just quickly talk about the market for a moment. Now, this is not unique to Latin America. There's obviously a lot of market challenges around the world, but, I get the sense that, for a while there were so many headlines and so much media about the Latin America crypto boom. Seems like it's cooled a little bit. Again, I think that's happening all over the world, not just Latin America. But I'm just curious, like from an exchange perspective, how you see that, and are you seeing that? Are you seeing some of the activity and volumes? I'm just not hearing the same kind of excitement that we heard maybe a year or two ago. And again, that's true kind of everywhere. But I'm just curious, how you see it from where you're sitting.
So it's the same across Latin America. There is a less news coverage or less excitement. I think the price of assets have a lot to do with that. But the thing that we have been seeing a lot across Latin America is that especially the use of stablecoins has been growing and growing, and that is something that is becoming more common, and there is a lot of economic flows that happen and a lot of transactioning. So crypto comes back, appears more in broader context, and it's more and more normalized as part of life, especially in Argentina, which is the levels of adoption are very high, and then for example, to give an example, there is an election now in Argentina, and there is a popular podcast that like 3 major candidates went to talk about blockchain, crypto, and technology, and these are things that need to be covered. Like these are things that are part of the daily lives of people. So while there is like less excitement, and I think that will change when there is more price activity, what I do see is there is a lot more common use of this technology, and not just speculation.
Thank you very much. We're going to have to leave it there. Thank you so much for joining the show.
Thank you for having me.
That was Ripio founder and CEO Sebastian Serrano.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
FTX said in a legal filing that BlockFi's bankruptcy proposals are an abuse of bankruptcy rules, with $1 billion of disputed transactions at stake. Joining us now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk State of Crypto newsletter. For the love of God, you need to subscribe to this thing. Good morning, Nick.
Good morning.
Okay, so FTX, they bailed out BlockFi last year, back when we thought FTX was the white knight that would save crypto. Oops. Anyway, what's going on now with BlockFi's proposal, and how are these two connected still?
Yeah, so a few months ago, BlockFi put out a proposal for really trying to settle out how some of its claims could be organized, or some of the debts that it owes other parties could be organized, and trying to set up a voting schedule for the different types of creditors. Right. This morning / yesterday, FTX filed an objection saying that under that proposed BlockFi schedule, the funds that BlockFi owes FTX might not be, properly repaid. Basically, to your point at the beginning, where FTX is alleging this is an abuse of the bankruptcy system, FTX appears to be alleging that BlockFi is seeking to get out of that particular, those particular debts by, through its filing and through the bankruptcy process.
And, we see our favorite comic villains for crypto, 3AC and SEC, they're objecting to this. What's going on? Why are they so upset, the two of them?
Yeah, so 3AC got a similar concern. It says that BlockFi owes it more than 200 million, 220 million, and it's concerned that it might not be able to object to certain fraud allegations or issues like that. The SEC's concerns are a little different. It's more focused on some of the language of the actual proposals, and it's similar to what we've seen with the SEC's opposition to, for example, Voyager's, Chapter 11 bankruptcy process. That's more procedural. It's more focused on making sure that, in the SEC's view, that the appropriate individuals and parties are, given the level of responsibility that they should have, meaning, they want to be able to, investigate management. They want to make sure that management is not released from any, certain liability claims or anything like that. So three different objections really, but following similar, threads of what we've seen before.
Nick, thanks very much for joining us this morning. We will see you tomorrow.
I will.
That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. That's it for First Mover today. Thank you to my co-hosts Emily Parker and Lawrence Lewitton. We'll be back same time, same place tomorrow. You're watching CoinDesk TV.